Hello, everyone, and thank you for joining us. Due to the number of participants we have, phone lines will be muted for the duration of this webinar. You can still submit questions using the Q&A feature in your toolbar, and we will follow up with answers to your questions after the presentation. We'll also be sharing a recording of this session by close of business tomorrow. I'm now going to go ahead and hand things over to our presenter, Steve Crutzen, Senior Director of Insurance Intelligence here at JD Power. Steve?
Hi, thanks, Carolyn. So welcome to everybody who's joined the webinar today. I'm glad to see so many attendees and that you're so interested in the topic. I think ours is an industry here, property casualty insurance, that doesn't normally seek out much in the way of media attention. And my goodness, have we had a lot of that in the last couple of years, even as recently as today with all the events happening down in Florida and the outcomes of the hard market that we're in affecting insurance premiums so much and how that's affected consumer price inflation. All these things are coming together where our industry sure has been in the spotlight as of late. And what we at JD Power do within the insurance industry, we do a number of things, but what we really focus on and what we're going to talk about today is just talking to people about their insurance experiences. And for today's webinar, we are going to review some of the results we have from talking to two different audiences. One, in our small commercial insurance study, we spoke with people that represent employers that have up to 50 employees. So a business that has up to 50 employees is how we define a small commercial enterprise. And we asked folks that work at those companies that influence the insurance decisions that are made for the business, the commercial insurance decisions, about their insurance experiences with their commercial lines insurer or insurers that work with that business. And the second group is we talk to independent agents who write property casualty business, whether that be personal lines, commercial lines, or both. We ask them about their experiences with insurers. And today we're going to go through some of the high-level findings around what is driving a better experience for a small commercial account and what is driving a better experience for an independent agent. And what it comes down to is, in a lot of ways, our data showing this year is that it's trust. And trust will drive a better relationship, and that better relationship will definitely drive growth. So today we'll focus a fair amount on trust, but we're going to talk in general about how do we in the insurance space here in property casualty insurance grow commercial lines relationships, and how do we improve the relationship if we sell through and distribute through independent agents? How do we improve that relationship? Because it all ties together to growing our businesses. So at JD Power, I mentioned we do a lot of work in a number of different aspects within the insurance space. The surveys that we do, if you look at this slide, you're seeing all the different surveys we do throughout the course of a year, where we now touch consumers, agents, small businesses about 12 times a year. And we publish a study based on the conversations we have with them via a survey, which is our primary tool. Sometimes we'll do interviews with people more one-on-one or in groups. And what you'll see here is the two slides highlighted in green today, the independent agent study and the small commercial study, are primarily focused on that servicing of the policy. We have some products off to the left here where we focus on the shopping experience of a customer, whether that be the broad study looks at the broad entire shopping experience or insurance shopping study, or where we zero in on the digital experiences while shopping and within day-to-day servicing in our digital experience study. I won't name all the studies here in the middle, but you can take a look at all the work we do around the day-to-day service with different lines of business, different types of customers, and in this case, independent agents. And then off to the right, we have a suite of products where we evaluate that real moment of truth that a customer has with their insurer when they have that claim, whether that be an auto claim, a property claim, or a deep dive into the digital claims experience. So for today, we'll start off with looking at some of the insights from our most recent small commercial insurance study. This study published back on August 13th to our subscribers. If you're not a subscriber, you would have seen a press release come out on August 20th, speaking through some high-level findings and with the rank chart of how each of the brands that we profiled in the study, how they performed in overall satisfaction. But of course, our studies focus and evaluate many things, most of which go beyond just the idea of overall satisfaction. That being said, in the 25 years we've been doing work in property casualty insurance, it's very safe to say we have reams of data to prove it, that the degree to which a customer, whether that be a personal lines customer, a commercial lines customer, or in the case of an agent, the degree to which they're satisfied with the insurer, that is highly predictive of the financial success of the insurance company that's being evaluated. So today we'll focus on trust, we'll focus on satisfaction, we'll focus on ways to grow the business, and those concepts are all tied together, as you'll see throughout the webinar today. Starting with that commercial experience, one of the things we wanted to look at in the survey, we added some questions last year to our survey and spent a little bit more time analyzing the results this year, was with all the macroeconomic changes we're seeing. As I mentioned at the beginning, our industry has a spotlight on it in terms of how rate changes and premium increases are affecting CPI numbers and things in the economy. But how is the economy affecting these small businesses? And we saw some pretty good news this year. If you look at the top, we break out small commercial enterprises into 3 different tiers. So those that have fewer than 5 employees, we call micro. Those that are medium have between 5 and 10 employees. And the larger of the small businesses have between 11 and 50 employees. And as you'd expect, the larger the business, more likely they are to have revenue of at least $1 million. But each of the 3 tiers is more likely this year than last year to tell us that their revenue is $1 million or more. So at the high level, top line, revenue-wise, we're seeing growth across all 3 tiers. That, from a top line perspective, they're healthier businesses. But we spent a little bit more time this year looking at, okay, how about your financial plans for the future and your current financial obligations? How are you doing on those? Because that is going to help us understand maybe some of the changes that happen to their insurance needs. And what we'll see here is that the micro businesses, half of which are expecting to be able to invest in their growth over the next 2 years. But the large businesses, more than 8 out of 10 are telling us, yeah, we expect to have the cash flow to be able to invest in our business and the growth of that business over the next 2 years. On the flip side of that, though, the smallest of the businesses, those employees, those businesses with 1 to 4 employees, over 90% tell us that they're able to pay most or all of their financial obligations on time as of right now. So if you look at the larger, though, only 7 out of 8, so 1 out of 8 are telling us they're having some measure of difficulty paying all of their financial obligations on time right now. So maybe some optimism for the future at 81% saying investing in the future, in growth in the future, but maybe some reality check that they're having a little bit of a hard time right now. So when we look deeper at what are the challenges that are impacting your insurance coverage needs, so knowing that overall revenue is up, however, based on the size of the small business, they might be more or less having difficulties with either investing in the future or with just meeting today's financial obligations. We said, well, what are the things that are affecting your insurance needs? And we found that 88% told us that the economic challenges in the past 12 months have affected their business and as a result affected their insurance needs, which is down a few points from last year. And the things that most rose to the top were, as you might expect, overall inflation. Now that's naturally had an effect on profit margins, sales and revenue growth. And if you think about small businesses, many of them are quite sensitive to gas prices. So that showed up as one of the 5 leading drivers of an economic impact on their insurance needs is gas prices, and then just overall capital needs and cash flow. So across all of our work, we would be remiss if we didn't talk about what's going on with rate increases and the effects on premiums. And with these small commercial enterprises, if you go back all the history we've been doing this work, in 2024, we saw the highest percentage of small commercial enterprises telling us they had a rate increase in the past year. So this year, 36% told us that their premium increased over the last year, up steeply from 2021. You see they're at 21%, and even up to when we say 2020 here, you think about we're looking at the past year. So these would be premium increases that largely happened in 2019 prior to the pandemic. That was kind of like a base rate of what the prior to the pandemic, what was happening. You see about 1 in 4 would tell us at that time that they had a premium increase. Then we dive a little bit deeper into it. We say, okay, well, there's not all premium increases are created the same. Not all of them even have the same reason to exist. And what was encouraging this year in the data was that while more small businesses are reporting a premium increase, among those 36% that say their premiums went up, fewer are telling us that it was just a base rate increase initiated by the insurer. that was about half of the small businesses that had an increase. 51% of the 36% said it was an increase that was initiated by my insurer, which was down 6 percentage points year over year. So some reason for optimism there. Another reason for optimism, you go down a couple categories here, you see a change that the customer made to their policy. So that's going to be reflective of what we saw earlier, that the businesses are growing. They're adding employees, their revenue is growing. They may be adding physical locations, physical facilities, or more machinery if they're a manufacturing business that requires some changes in the policy coverages, and that's up 7 points. So the customer is twice as likely as last year to initiate a change to their policy that requires a premium increase, which of course in this space means their business is growing. That's a good thing. More are telling us this year though that their premium went up because of a premium audit, and that is definitely something that in our study we know that the degree to which these small businesses understand their premium audit and understand why and how that drove a premium increase, that can have a massive impact on how satisfied they are with their commercial lines insurer. And fortunately, only a small handful, 9%, don't really know why their premium went up. So continuing on a trend, if you attended this webinar last year, you'll remember we spent quite a bit of time focused on the different sizes of small businesses, these 3 tiers, and the overall level of satisfaction that each had with their commercial lines insurer. And the hope was last year, and even we spent some time on it the year before, was perhaps these micro businesses might get a little bit more attention from their agent, or if their agent served, or from their insurer, and that we'd see a closing of the gap in satisfaction between the smallest of the businesses and the larger ones. And in fact, the opposite happened. We saw that the micro businesses, their satisfaction scores fell 46 points year over year, down to an average of 643. And the largest of the businesses really held flat. A 2-point change is not a significant change year over year. And the medium businesses kind of fell in the middle there with a 26-point decline, which means this year we see an 82-point difference in satisfaction between the largest of the small businesses and the smallest of them. Now, we don't have time today in a webinar to go through all of the details. We're doing that with our subscribers, but I will spend a moment here describing some of the changes we made to the survey this year. For more than 20 years, the way we've measured satisfaction has been really keenly focused on the tangible experiences that you have as a customer or as an agent, strictly related to insurance phenomenon, right? So my billing and payment, my premium that I'm paying, if I had to claim, the claim itself. What we haven't measured is some of the things around brand strength, or some of the emotional connections that a customer or an agent has to a brand. And we all know that sometimes we buy from brands, or we do business with brands if we're an agent, that not necessarily all of it is a rational decision based on actual experiences. We may have a stronger or lesser emotional tie to a brand that can influence our decisions, and it can influence how we evaluate a brand. So one of the many changes we made to this and other surveys this year at JD Power in our insurance practice is to include the concept of trust. We think that around all the emotions you could have with your insurance company, trust is likely to be the most important of those. And by including that in our quantitative model that we use to score insurers and to see how satisfied a customer or an agent is with their insurer, we actually found that trust is the most important driver of that overall satisfaction score. So in the small commercial study this year, we're putting a lot of focus on what is it going to take then to improve trust. And then in this slide, you see what is the benefit of improving trust with your small business account. And we have 4 groups of small businesses here. Those that are saying right now that on a 1,000-point scale, they rate the trust with their insurer as a 400 or lower. You can see 401 through 600, 601 through 800, and then those that are really trusting of their small commercial insurer, 801 through 1,000. You see how many of these small businesses fall into each group. So there's no majority in any one of the groups, but the plurality, the most common group here is the 40% that fall into that 600 to 800. And then we kind of cross that with a few of the questions that relate to real business outcomes. If you think about the gray line here, overall satisfaction. On the low end here, you have a 429 average satisfaction score overall if you're low trust. On the high end, an 877 satisfaction score if you're high trust. And then while these questions are intent related, they're not necessarily the exact same as true behavior. If you look at definitely will renew, do you intend to renew with your commercial lines insurer? It's almost a fourfold lift in the intent to renew if they're more trusting versus the least trusting group. And again, I definitely will recommend, you're going to make recommendations to other small businesses in your community or other small businesses you know to recommend that insurer to them. And again, about a fourfold increase in their intent to recommend their insurer if they're more trusting. So clearly, trust is very impactful in many of the business outcomes, not just overall satisfaction. Then we said, okay, well, let's look at, let's put some dollars and cents around this. We know that it impacts a lot of business outcomes, but if the average annual premium for these small businesses, and this comes from our survey, we asked the small businesses, how much do you spend a year in insurance premiums for your small business insurance? And the average was $16,000. And you look at those same four groups we had on the prior slide, where 18% are highly trusting, 17% are very low on their trust metric with their insurer. We looked at some of these business outcomes, and as you saw, the definitely will renew. The third column here is about a fourfold difference. Same with definitely will recommend. But look at that first column, the definitely will not shop. So we're saying, okay, would you consider shopping for a new carrier for your small business policy? 22% told us there's no way, I'm not going to shop at all. I definitely will not shop my policy in the next year if they were very trusting of their carrier. That was only a third of as many if they were low trust. So 7% said I definitely will not shop. So if you extrapolate that out across the average of 16,000 on a per policy basis, that means you have a secure amount of premium of $3,500 if you have a high level of trust with your small business customers, and only $1,100. So if you think about maybe you're writing, let's just use even numbers, 1 million small business policies, that secure premium is $3.5 billion versus 1.1. That's a $2.4 billion difference in the amount of premium you can count on next year because that customer won't even consider shopping. So some really strong dollars and cents there behind building trust with your small business account. So now we know why it matters and how much it matters. In our survey, we looked at, well, what can you do to impact it? And there are really 5 key metrics here, 5 key behaviors that if you were to engage in these behaviors with your small business clients, you'd see a lift in trust. And those are listed here on the left. I won't read each one of them to you, but you can see here the 5 key behaviors to engage in to boost trust. And what the chart shows is if your customer, your small business customer right now is telling us, my insurer hasn't met any of these 5, their average trust with you is a 474, which puts them in that low, just above that low satisfaction or that low trust tier, where many of them are going to shop. Many of them are looking to find another carrier. They say they do not intend to renew, and they're really not making positive recommendations around your insurer to other small businesses. By just engaging in one of these 5 best practices, you get a 106-point lift in trust. By adding a second one, a further 91 points. And you can see here you build up to, if you're doing all 5, you have a 783 trust score versus a 474. So in essence, over 300-point lift in trust, which makes a massive difference, as we've already seen, in business outcomes by engaging in these 5 best practices. So these are kind of the recipe for building trust with your small business account. And as no surprise with the data we've already seen, those micro businesses, only 19% of them, so 1 out of 5 are telling us that their small business insurer is meeting all 5 of those. And across the large businesses, more than twice as many, 42% said the same. Now, while they're not always in that list of top 5, some of them are made that list of top 5, there's things you can do very early in the relationship with a small business to improve trust. If you think about before you even win the policy with the customer, with that small business, things you can do during quoting. If you provide the option to tailor or customize a quote to that customer's specific needs, you get a 61-point lift in trust. That's only happening right now for less than half of customers. Only 45% said that when they were out getting quotes that they were allowed to tailor or customize their quote specific to their business needs. A second one during quoting is provide recommendations for additional services. And you think, well, why would they care? Well, they do care. It's not, you don't have to be shy or embarrassed or bashful about talking about your other products and services. And essentially you win by trying to cross-sell them. and they also become more trusting of you. And that still is only happening for less than half of small businesses that went out and shopped their policy. A 55 point lift in trust, but only 40% said that happened. And now when you win the policy, you bind the policy with a small business, what can you do to, during onboarding, to improve trust? Have a representative from the insurer visit the business. That's a really key one there. It's the most impactful thing on this slide. By having somebody go visit the business, somebody perhaps beyond the agent, maybe somebody from underwriting or somebody from loss control, go out and visit with the business, you can see a big lift there early in the relationship, a 71 point lift in trust, and that's only happening for 1 out of 5 small businesses. Instructing the customer on how to download the mobile app, big lift in trust, still only happening 1 out of 4 times. And then communicating the policy features and resources they have to understand their policy and the resources they have to access their policy in the future, a lift in trust, and still only happening less than half the time. So if we step back from all this data, you see there's a lot of opportunity here that the industry is missing out on. Really, any insurer that really executes on these is going to build a more trustful relationship with their customers, their small business customers, than their peers, because I mean, look at some of these, 19% of the time are they even being visited by somebody from the insurer. Only half the time, or less than half the time, are you even trying to mention other services that you provide. So lots of opportunity there to improve that. And these aren't like asking you to climb Mount Everest type things. These are most of these are fairly simple things to execute on. So then once you have the relationship, what can you do to build more trust throughout the relationship? The degree to which they understand their billing statement has an 82 point lift in trust. And right now, a quarter of customers say they only partially or not at all understand their billing statement across those small businesses. What can you do to improve billing statement understanding? Encourage them to review their billing statement and ask them if they need help, to offer help to them. Now today, 2/3 are saying they review it on their own. Another third say they review with assistance from the insurer agent. But the overall impact on understanding is 33 points for those who do review their billing statement, whether alone or with help from the insurer, versus those that do not. Offer combined billing for those with multiple policies. You think about a commercial, many commercial, even small commercial enterprises will have a policy package with you. A good segment will have a BOP, so kind of all rolled into one, but others will have a policy package with the different parts of that policy package. And if the billing is all rolled together, that helps with building trust. And also providing billing statement electronically helps with the understanding of the billing, which then helps with trust. Communications. If you're sending out personalized information that is relevant to that business and their business needs, it happens about half the time. And when it happens, you get a higher trust. They say that the insurer is more committed to understanding their industry, and that the insurer has more of a complete understanding of that individual business's needs. And all of these KPIs are things that lift trust and lift overall satisfaction. Building trust when you take premium. So when you take rate, we know that premiums have to go up. We have to remain solvent as an industry, and some small businesses will just need to pay more premium for their coverages. But you don't have to write off that customer that you're increasing premiums on and say, well, they're just gonna have to suffer with their trust in us or their satisfaction with us. If they understand the reasons for the increase here in the top, in the middle, that you see a 741 score. If they didn't have a premium increase at all, or even had a decrease in premium, a 742. So basically the exact same score. If they had an increase, but they understand why, versus those that did not have an increase. So again, you do not need to write off the relationship with the customer when you take rate. Get out there and explain to them why you're taking rate. And of course, in our study, we go into more details. For today's purposes, we'll just kind of leave it there. If you get out and help the customer with their understanding of the reasons behind their premium increase and do it through the right channel at the right time, you end up the customer that trusts you and is just as satisfied with you as somebody who did not experience a premium increase. If they say that the rate increase was driven solely by the insurer, as you might expect, lower trust than if their business needs changed or if they made the change themselves to their policy. But again, in that group that we have circled here in red, the insurer-initiated rate change, don't forget about what we see here at the top. If you're out there proactively communicating, doing it through the right channel at the right time, you can definitely salvage the relationship and keep them just as satisfied with you, just as trusting of you as they were before a premium increase. And then lastly, of course, we all know the claim is the moment of truth. Those who have filed a claim in the past 12 months, those small businesses that have filed a claim with their insurer in the last year, are more trusting in their insurer by 71 points than those who have never filed a claim. But look at that middle group there, that the impact of having a claim, even if it was multiple years ago, still is a pretty big lift in trust, 52 points higher than those who have never had a claim. Now, of course, as an industry, we don't want to say, okay, let's get all of our customers to have a claim. That's not what we want, but we do see that, and I'll step back from this result for a moment here and say, across all the work we do at JD Power, think about we're talking about small commercial right now, but I'll look for the moment at personal lines auto claims. You wouldn't think it, what you hear about our industry in the media or what you see said about us, but a personal lines auto claim is one of the highest satisfaction scores of any study we do at JD Power across any industry, not just insurance related. But an auto claim is overall across the industry. There are obviously there are exceptions. Not every claim goes well, but the average claim is one of the most satisfying experiences the customer has, according to our metrics. So that claim here in the small business, when it happens, it's a lasting effect that for many years you can still have a stronger relationship and a higher trust. And especially if you had one recently, you've proven the value of your policy that you have for that customer, that small enterprise, and you have an even higher level of trust. Now, there's a lot that goes under the chart on the bottom. We don't have time today to go through all of it, but the longer the cycle time, so in other words, in many cases, the more complex the claim, the lower the trust. There's ways to mitigate some of that with the claims experience, but for today's purposes, we'll just say that just over a third are telling us that their claim took more than 10 days to settle or to resolve, 48% for those micro businesses, and when that happens, trust is 58 points lower than when it's a quick, easy claim. So with that, I'll just quickly remind everybody on the call here today that, as Carolyn said at the beginning, we won't have time or the availability to take questions during the webinar, but feel free to send them to us. You can ask them in the chat. We'll follow up with you. And with that, we'll move into the independent agent satisfaction study. What we saw, some high-level findings of what we saw with independent agents this year. Overall, anybody in this call knows that the property casualty insurance environment has become more challenging for independent insurance agents. If you think about where they sit between the carrier and the customer, and they want both the carrier and the customer to like doing business with them, and they certainly want to retain the business with the customer. And all the challenges that are facing them with the hard market, with the changing of more strict underwriting criteria and the underwriting appetites of insurers, with insurers pulling out of certain markets and certain lines of business, very challenging environment for an agent to say, well, I want to maintain a strong relationship with the insurer, but I've got to retain the policy as well. I'm being caught in the middle of that. So one way that has manifested this year, and I'll note here, this is the first slide on the independent agent study. In many of these slides, you'll see us break it out between personal lines and commercial lines. And what we're looking at there is we ask the agent to evaluate one at a time an insurer. And in this study, they can evaluate up to 2 insurers. But when they're evaluating an individual insurer, we ask them to focus on the personal lines or the commercial lines relationship they have with that insurer. We know that if things are going really splendidly in commercial lines, but there's some hiccups with personal lines, even though we've asked the agent to focus on commercial lines, some of those perceptions around the personal lines relationship will kind of leak their way into the evaluation, but we're asking the agent really try your best to focus on either the personal lines relationship or the commercial lines relationship that you have with the carrier. And we're charting here 3 different outcomes, 3 different evaluations that or parts of the evaluation that the independent agents gave around the personal lines and commercial lines relationships. And at the top, we see for personal lines, really an artifact or an outcome of the stricter underwriting criteria, the lesser appetite for risk right now in the industry, that by 7 percentage points, agents are saying the insurers are less flexible in the design and onboarding of policies. By 8 percentage points, that insurers are rejecting potential clients more often. So only 37% right now are saying potential clients often qualify for a policy. That was 45% a year ago, and if you go back a couple of years, it was even higher than that. So what that results in is agents are telling us that they require a high level of effort to work with the insurer now. And what we mean by high level of effort, you'll see there on the bottom left, is we ask on a scale of 1 to 5, how much effort is it to work with this insurer, in this case in personal lines policies, and a 4 or 5 on that 5-point scale means a high level of effort. And right now, about a third of agents are telling us, independent agents are telling us that it requires a lot of effort on my part to work with the insurer. That was up 5 percentage points from last year. Commercial lines, not as much of an impact. So while down, flexibility is only down 4 points. Qualifying for a policy is only down 3 versus 8 for personal lines, which leads to not much of a change in terms of the effort, pretty much stable from last year in terms of the effort required to work with an insurer. Another thing, knowing what's happening with consumer shopping at the bottom here, we have a product, our loyalty indicator and shopping trends product, what we call list. You can think of it as your shopping list, because what we're evaluating there is on a daily basis, we survey 750 US consumers, a different 750 every day, not the same, we're not on a longitudinal type of project, but we survey 750 different US consumers every day asking if they shop for auto or, depending on their living situation, homeowners or renters insurance in the prior 30 days to when we surveyed them. And what you see on the bottom here is that rate quarterly. So if you ask people, the most recent data point we're showing here is Q2 of this year. So between April 1st and June 30th of this year, when we asked people, did you shop for auto, homeowners, renters insurance, any one of those in the last 30 days, the average rate of shopping we got was 15.6%. If you look at just auto, it's going to be in the 13% range. Many consumers shop, if they're shopping for one, they shop for others, they want a bundled policy. But there's some incremental shoppers that are just looking for home or rent, which puts the overall shop rate up there at about 15.6%. So knowing that the hard market and the premium increases are driving consumer behavior, we've asked for the last couple of years, how is that driving independent agent behavior? Because an independent agent can, if they wish to, they can proactively shop on behalf of their customer. They see that premiums are going up, and maybe on this renewal for this customer, this person is going to see, or this household is going to see, a massive increase in their premium. And as their independent agent, I still win if I switch that customer to a different carrier and keep them in my agency. While the carrier loses, I'm still the winner here if I can keep that premium and I can keep that commission on that premium. So we suspected, and we definitely see here in the data at the top, that the independent agents are out proactively shopping before their customer finds out about how much the increase is going to be or asks the agent to shop on their behalf. This year in personal lines, almost 2/3 of IAs told us that they're proactively shopping on behalf of their customer to keep that, basically to keep that customer, right? So to offset some of that premium increase, rather than delivering the bad news of, well, your premium is going up 40% with this insurer, they could maybe perhaps find a lower premium and say, well, it's going to be up 10%, but the insurer you were with, or that you're with today, is going to go up 40, so let's get you switched over, and still kind of be the hero to their customer. Now in commercial lines, it's happening a little bit less often, but still over half of independent agents work, and when they evaluate their commercial lines relationships and with the carrier and with their customers, are telling us that they're out there proactively shopping on their customers' behalf, which was up from last year. This slide, we're going to show the overall satisfaction independent agents have with the carriers that they're evaluating and the longer term trend. And what is really surprising here is, despite all the challenges that agents are facing, the market is facing, the industry is facing, for personal lines relationships, they're just as strong as they were last year, which was a record. 774 last year was the highest personal lines agency relationship score we saw, and it maintained this year despite all those challenges. And even more, I think, compelling is that for commercial lines relationships, they increased almost 20 points this year. The satisfaction score overall with the insurers was up 20 points, 19 points, almost 20 year over year. And for the first time ever in this work, independent agents are more satisfied working with insurers on commercial lines than with personal lines. On the bottom here, we're going to go through the different components, what we call factors, that drive the overall score. So you can see on the bottom, on the far left, what we see on the top: no change in personal lines, a 19-point increase in commercial. The change in personal is primarily driven by a decrease in quote satisfaction. So the agent getting the quote for their customer, that's more difficult, as we saw. That's affected by underwriting restrictions, etc. And then the product offerings and risk appetite. That's where also some of this underwriting strictness is showing up, that the risk appetite is lower, and satisfaction that agents have with personal lines relationships there is suffering because of it. On the other hand, though, in the green, you see the commercial lines across all the different factors we measure. that drive the satisfaction between an independent agent and the carrier, they're all up year over year and up quite a bit. So why does satisfaction matter? Why does it matter that I satisfy the independent agent? Like we did earlier, looking at the trust score, here we're looking at the overall satisfaction score, but we put the independent agents into one of 3 tiers. So that they evaluate on a 1,000 point scale their satisfaction with the insurer as a below 700 or 700 to 799 or 800 or higher. And right now we'll start with the bars themselves. Let's look at in the light gray, writing more with the insurer compared to 12 months ago. So we asked the agents, are you writing more policies, more premium with this insurer than you were a year ago? And those that give a high satisfaction score, 38% said, yes, I'm writing more business with that carrier than I was a year ago. More than 3 times as much as those that had below a 700 satisfaction score. Are you intending to recommend this insurer more to your customers in the next 6 months? And there you see more than a 7 times relationship. That 45% of the highest satisfaction agents are saying, yep, I'm going to recommend this insurer more often to my customers in the coming 6 months versus only 6% if their satisfaction score is below 700. Now at the bottom, you can see how many agents are falling into each tier. Luckily for our industry, or maybe not luckily, as an outcome of the efforts the industry has put into working with agents, over half are in that really high satisfaction tier. But if you want to get down to the dollars and cents again, like we did earlier in the commercial line study, look at the total annual premiums that the agent writes with the insurer and how that is impacted by satisfaction. You get a little bit of lift going into that middle tier, but if you really want to have a lot of that agent's business and you want to have agents that are really successful writing for you and get to that, they're writing an average of $1 million with you, you have to be in that 800 or higher. So this study, like our other work, will focus a lot then on, well, what does it take? What are the elements of the recipe to get to that 800 plus score so that we can drive that that recommendation, that growth in business, and the higher amount of premium with the independent agent. So what can you do? What can you do to support these agents as they're navigating a very difficult insurance environment, unhappy customers, a media that's definitely not saying positive things about our industry, and the agents are caught in the middle of all that? What can you do? And one of the things you can do is agents interact quite a bit with you through your insurance portals. And less than 1/2 of agents right now report having access to the features in those portals that lead to the greatest overall satisfaction. So, and like before, we're looking at this personal lines versus commercial lines. So if they're getting advice and guidance through the platform, right now, regardless of personal or commercial lines, only about 1/3 say they are. You can see the lift there in overall satisfaction. If they get sales training offered to them through the platform, again, not even half are getting that, but a lift in overall satisfaction, noted there in the green. And then are you identifying for them cross-sell opportunities? Are you proactively helping them grow the PIF count and the premium dollars with an individual account or with an individual household if it's personal lines? Less than half the time is that happening through the portal, and when it does, a big lift in satisfaction. As you would expect, there a bigger lift, 73 points in satisfaction for commercial lines than in personal lines. Are you involving the agent in the claims process? So, of course, the industry trend has been to remove the independent agent or even a captive agent from the claims experience. That if a customer were to reach out to their agent and say, okay, I was involved in a collision, or I had a kitchen fire, or whatever the case may be, I want to report a claim, the agent more often now is saying, okay, well, here's how to reach out to the carrier and do that. But when you talk to agents themselves one-on-one, you find out that, that works pretty well right up until the moment that something goes wrong with the claim. And what I mean by something goes wrong is from the customer's perspective. Perhaps here we are talking on a Thursday. If I'm talking to my adjuster and he or she says, well, I'm going to look into this, I'll get you an answer by tomorrow, by Friday. And I don't get a call back or an email or a text from the adjuster. I go through the weekend kind of like, okay, I'll hear from him or her Monday. Monday rolls around, I don't hear. Tuesday rolls around, okay. By Wednesday, I'm probably going to call my agent and say, look, I've been trying to reach the adjuster. I haven't heard back. I've followed up with them afterwards. I'm not getting in touch with them. You need to help me out here. What's going on with my claim? And in that moment, the agent's going to be dragged into it. And when we talk to agents, we ask them, well, how much information do you have about the progress of the claim, or how much visibility do you have into the claim system? And we find that overall, the agents themselves are fairly dissatisfied with the amount of information they have available to them. Because the industry trend has been to kind of remove them from the claim, the access they have to the claims system and the claims information has been reduced. But you think about the kind of the worst case scenario is customer is dissatisfied because the carrier, the representative from the carrier, in this case, my example, an adjuster, isn't getting back to them, and they're reaching out to who they think of as their advocate. Hey, independent agent, go on my behalf and talk to the carrier, find out what's going on, and the agent can't access the system, doesn't know what's going on. That's the worst case for both the customer and for the agent. Now, and the data here, if you look on the left, how involved is the agent? Around half the time they are, and when they are, they're far more satisfied with the carrier if they're involved in the claims process. Now, on the right, we're looking at how frequently does the insurer communicate with you on the progress of the claim. If it's less than once a week, much lower satisfaction than if you're communicating at least once a week or more. And in commercial lines, you see here that there's a lot more communication happening. 85% are saying they're getting communication once a week. That would tie back to what we saw. We don't have the slide here for today, but in the small commercial study, that a small commercial client who has their agent involved in the claim, they want almost daily updates. They're not going to just want once a week communication. So that's part of the reason why here you see that the commercial lines claims, the agent's getting more communication from the insurer because the customer there demands it. Training is a big component to driving agency satisfaction. The independent agent is more satisfied with you if you help them grow their business through training. And I say grow their business because if you look at the left here, if you're only offering product training, you get in commercial a 793, overall satisfaction in personal lines is 761, better than offering no training. But if you're only offering business growth training, and off to the right there, we show the kinds of training that we categorize as business growth, the scores are about 60 or points higher in the case of personal lines, almost 100 points higher. Now, if you're offering both, that's kind of obviously the best of both worlds. They get that product training if they need it. They get their business growth training because they want it, and they are very satisfied with the carrier. Now we look at, well, what do you mean by business growth training, negotiation training, customer experience training? So in other words, how to work better with the customer. Some research we've done, or not research we've done, but research we found done by others is that generally speaking, not specific to insurance agents, but I think everyone in this call is an employee of one or another company, right? And we know that based on this survey that was done, 9 out of 10 of us are nervous and we don't really want to have tough conversations with somebody at work. And that applies to an independent agent. They don't really want to have these tough conversations about, well, your premium is going to be going up 40%. Let's look at what we can do about it. But you think about customer experience training, that can really help with how to have those tougher conversations with the client, how to lead that client to being more satisfied with you and with the carrier because you had that tougher conversation. Of course, business development training leads to business growth, and IT training can really help too. You think about the portal, some things we talked about a moment ago. If you help them better understand and better navigate your insurance portal, or if you're training them how to integrate your system with their AMS, you can lead to a more satisfied agent as well. A couple other slides here we'll talk about is not everything in terms of compensation comes down to commission. And what you'll see in the results is that different forms of non-commission incentives can have a massive impact on satisfaction with the carrier. Of course, on the top, you'll see here, if the non-commission based incentives are viewed as helping both the agency and the agent personally, you get the highest scores. But if you're going to help one, we're all humans here, right? We kind of have some level of self-interest. It's better to help the agent personally than to help the agency more broadly. But again, the best case scenario is to help both, offer non-commission incentives that are viewed by the agents, helping both the agency as a collective and helping the agent personally, him or herself. Now, what are the ones that have the largest impact on satisfaction? For personal lines, look at the 3 there. You see trips. Yep, we're going to send you and your spouse to a really nice location, put you up for a few days or maybe a week. Marketing funds, the co-op funds will help your independent agency fund the billboard or maybe some radio ads in your town. But look at the second one there, prize items. That you get a 95-point lift in satisfaction by offering prize items. And I'm going to dare say the cost to provide prize items is a little bit less than providing trips or marketing funds. Commercial lines, similar pattern there, where Even though prize items isn't one of the top 3 largest impacts on satisfaction, still an 85-point lift in satisfaction compared to 98 for a trip, 105 for a cash reward, and 94 for marketing funds. We talked about in small commercial having somebody from the carrier visit a new customer and how that has a lift on satisfaction. The same phenomenon happens here with independent agents. If you have a representative, in this case, primarily who they want to talk to is somebody from underwriting. Come out and visit the agency. Get out there and visit them on an annual basis. Right now, that's happening only about a quarter of the time. For commercial lines relationships, 27% said somebody visited in the last year. For personal lines, 24%. You can see here the change from 2019, up quite a bit for commercial, pretty flat for personal. So the impact on overall satisfaction, you get an 85-point higher overall satisfaction score. And we saw what the satisfaction score does to business growth with you as a carrier a few slides back. 85 points is almost enough to take you from the bottom tier into the top tier, where you triple your premium, you have much more advocacy with the insurer, they're doing what they can to grow their business with you. As simple as just sending somebody out to visit with the agency once a year can help with that to that degree. Also, underwriting flexibility and appetite, something that we all have to take into account right now, working with independent agents that they're, like we said, caught in the middle of all the things that are going on in the industry. We capture some of the things that agents are saying about how insurers could reduce the effort it takes to work with them. And a lot of those focus on underwriting flexibility and risk appetite. And off to the right here, the actions that really have a big impact on some of the key metrics in the study, being flexible during the onboarding we talked about earlier, making sure that customers can qualify for a policy, the limits of coverage are more than enough. That's something we didn't see earlier. And then also that agents can provide bundled policies. All those 4 elements can lift the satisfaction and relationship with the carrier. And then lastly here, specifically to commercial lines, if you help that independent agent feel that you understand the industries that they target. So independent agents, they don't want to sell to any type of commercial risk that walks in. Many of them feel like they have their own niche and they like to sell to 1, 2, 3 different industries. They know the industries well enough. They can talk the talk. They understand what coverages that customer needs. The degree to which you as the insurer help that independent agent feel that you understand the industries they're trying to sell into. You're providing marketing materials that are relevant for those industries. Your coverages, your endorsements are relevant for those industries, and you're fueling that agent's ability to describe those coverages and those endorsements and get that word out to the industries that they're selling into. You end up with a more satisfied independent agent. And with that, we're getting close to the end of the time here. I'll thank you for your time, and I will point you to, if you have a existing account relationship with us here at JD Power in our insurance practice, you'll see your account person here on the left, whether that be Marcus, Eric, or Josh. If you don't have a relationship with us, feel free to reach out. You can reach out to one of these 3 gentlemen, or Carolyn, when she sends out a follow-up material today, she'll send out a way to connect with me personally, and we can talk through the research we talked about today and get you connected with one of the gentlemen here on this slide to talk about doing some more business with us. And with that, again, thank you for your time. I hope today helps you grow your relationships with your small business accounts and build a better, stronger relationship with that independent agent. One thing that we know from all the work we do is, while there's so much technology in our space, all the talk about AI, insurance is still largely a people business, and making that person have a stronger trust with you, a stronger relationship with you, is a more impactful way to grow your business than most other ways you could look to grow it. So with that, I'll leave you for today, and thank you for your time.